Okie dokie, a very good day to everyone. This is MarketsAware, and today is the Daily Insight on the 25th of July 2016, as I mentioned, brought with love and care for MarketsAware. Today we are just going to have a little look at the week ahead of us, and the question we're going to ask: will the real Janet Yellen please stand up? So let's have a little look at the week ahead up into the 27th of July. First off, kicking off, we have the US consumer confidence. This is on the 26th of July at 2 p.m. GMT. Expectation is for the figure to come in actually slightly lower than previous at 95.7%. Opposite the 98% which came in previously. This is of medium importance, but still keep an eye on the dollar, Japanese yen, euro, dollar, gold, and the S&P 500. Following that, for those early Asian session traders, we have the Australian CBI Consumer Price Index at 1:30 a.m. GMT on the 27th of July. Now, expectation is for this number to come in slightly lower than previous at 1.1%, opposed or opposite to the 1.3% of the previous month. This is indeed of high importance, especially if you trade the Aussie dollar and the Kiwi respectively. Following on later that day, 8:30 a.m. GMT, it's the UK, and let's face it, we've been talking about the UK a lot. In case you missed it, there was a little thing called a Brexit, which anyway, it's caused a few issues. Now, the GDP preliminary, year on year, this is, the number expected to come in is at 2.1%, and it was 2% previously, but because it's only a preliminary number, it is of medium importance. But still, keep an eye on the cable, the euro, dollar, the sterling, Japanese yen, and the FTSE 100. Then, a little bit later that day, we're remaining on the 27th of July at 12:30 p.m. GMT. Things get a little bit more interesting. We have the US durable good orders. Now, the expectation is for the figure to still come in at a negative number at minus 1.1%, but that is to be slightly higher than it was previously, where it was minus 2.3%. So let's see what actual number actually is. This is indeed of high importance, so keep an eye on the dollar versus the other major currency pairs, gold, S&P 500, and the dollar index. Then it gets more exciting because at 6 p.m. GMT, we have the big one, which is the US Fed monetary policy statement. This is indeed of high importance, and we'll talk a little bit more about that a little bit later. So instruments to keep an eye on this event is the dollar versus the major currency pairs, gold, S&P 500, and the dollar index, just to name a few. At the same time, also happening at 6 p.m. GMT is, of course, the US Fed rate decision. Now, as we all know, they rose rates a little while back to 0.5%. Expectation is for them to do nothing at all to keep rates as it is. However, this is still of high importance, so keep an eye again on the dollar versus the major currency pairs, gold, US dollar index, name just a few. So let's talk a little bit more about, obviously, this major event happening at Wednesday, obviously the US Fed monetary policy statement, and indeed the Fed rate decision. Now, the question being asked is, of course, we're always, it's not just her, of course, but we're always going to ask that question: will Janet go for it? Now, just to give you the rundown, the Federal Reserve kicks off its monetary policy meetings on Tuesday. Now, as I've mentioned already, expectation is the central bank will hold interest rates, keep it at 0.5%. But more importantly, the market will look for any possible hints of a possible rate hike later in the year, maybe even in September. But here is the thing: expectations are fading that indeed we won't see, in fact, a Fed rate hike by the end of the year. So they will leave rates pretty much the same for the end of the year. But creeping in more worryingly, there are now many analysts actually thinking there is actually a 50% chance of them actually cutting cutting rates. Cutting rates. A lot of people are going, what? But Janet, you said that you could raise rates maybe 3 to 4 times this year. What are you doing now? Bad Janet. Very bad Janet. But I know, of course, she's going to blame the Brits, of course. And you can blame the Brits, especially you leavers out there. You know who you are. So let's have a quick look at the market as it currently stands, starting off with the S&P 500. As you can see, this is the S&P on the daily chart. Really, over the last couple of sessions, there's been very limited price action in this instrument. Again, this is probably down to the fact that they're waiting to see what occurs on Wednesday. Now, according to the good old Bollinger Bands on a daily chart, the key resistance remains at 2.207.72, with the key pivot, which is acting as the first support at 2.131.42. But like I'm saying, obviously it's all about Wednesday. Many analysts are actually expecting the events for Wednesday actually might already be priced in on this instrument. However, they are saying as well, any hints indeed of a rate hike increase, that's easy for you to say, increasing interest rates, or a hint indeed of them actually cutting interest rates, you could see a direction possibly forming on the S&P 500. Moving on to the dollar index. As you can actually see, the dollar index has had more of a direction than the S&P 500, but this really is more likely due to the fact that we are seeing a lot of general weakness in the other major currency pairs. Okay, don't forget the dollar index is based really on the dollar strength against a basket of 6 other major currencies. So this weakness is obviously helping the dollar index. Now, on the daily chart, the first key resistance, according to our good old Bollinger Bands, is at 97.4585, with the pivot acting as a key support at 96.4081. Wednesday is once again the key for this instrument. So really, Janet, how much do you love the dollar index? Really? How much do you love it? Do you love it? Show it. Show it. And moving on to gold as it currently stands. Now, gold over the last couple of months has benefited greatly over recent fear and uncertainty in the marketplace, which is obviously special thanks again to the BRIC exit results. But, however, since that, it's failed to break a very major resistance, and then since then we've seen it come under pressure, falling below the daily Bollinger pivot point, and resistance, acting obviously as the resistance as well, at $1,337.56. Key support for the yellow metal lies currently, according to the Bollinger Bands on the daily, at $1,302.92. However, again, Wednesday is going to be key. Any hint on Wednesday that a further rate hike or rate increase, it's easier for me to say increase, I guess, couldn't happen in the US, then we could see a major test of this major support level. And I underline the support level currently really is at $1,302.92. And finally, let's have a look at some currencies. We'll look at probably the most traded currency pair in the market. When they say everybody's favorite, my opinion, not mine. I do tend to find it a little boring, but everybody's entitled to their opinions. But anyway, let's look at the euro dollar. Now, this pair has currently come under pressure ever since Super Mario put on hold any idea of further easing. And of course, I'll bring it up again, the good old Brits, and just for the record, guys, I'm a Brit as well, but I'm one of the good ones. I said remain. Anyway, it doesn't matter. The good old Brits haven't helped either, causing further fear of economic slowdown in the EU. So this is putting pressure, of course, on the euro. According to our friend the Bollinger Bands, current resistance on the daily chart is at 1.10638. And support is at 1.09736. Interesting side note, Deutsche Bank has recently announced there's been an increase in speculators increasing on their net short positions in the euro versus the sterling. So it looks like there could be a possible bear bias going towards the euro, so worth keeping an eye on that, certainly. Anyway, that's a wrap for now. Remember, this is no way whatsoever to be taken as advice. It's purely a market insight. As always, a special thanks to Ned Dania for their awesome charts. We love you. You've been watching the Market Insight by MarketsAware. You trade safe.